CKGM, everyone. Another Union Hall cast. Happy to see so many of the Union community checking in again. Today we have Luke from SatLayer, one of our close partners in the Babylon and Bitcoin ecosystem, and Leo from Cysic. I guess I have to pronounce it that way, right? But my mind is still the Cysic. Who's a ZK partner, basically, and one of the most hyped ZK projects at the moment as well. Guys, maybe we kick it off with just brief intros on your backgrounds and what you guys do with your projects, and then we'll go nerd out a little bit about the tech.
Love it. All right, and BM everybody. Yeah, so Luke here, co-founder and chief janitor of SatLayer. So yeah, a bit about my background. So been full time in the space since early 2016, 2017. And then I think in many ways, the story with Bitcoin goes back way further. I remember kind of like reading, or honestly, it was more probably like skimming the Bitcoin white paper back in 2011 when there was that big Wired front page coverage back when it was still a magazine, and then kind of fast forward a bit to 2014. So you had Jeremy Rubin, one of the Bitcoin core developers, Danny Litzer and Christian Catalini do an airdrop to all the MIT undergrads at the time. Unfortunately at that time I had already graduated, so I didn't get any Bitcoin for free. But as an alum, definitely piqued my interest, and then as well as some of my schoolmates. And so we started kind of like looking into it, talking about it a bit, and bought a little bit of Bitcoin as a foreign C function for myself to learn. And immediately learned about crypto market cycles because in the next 2 weeks, Bitcoin price doubled and then crashed to nothing because that's when Mt. Gox blew up. But I think lucky for me, I ended up buying my Bitcoin on Coinbase, which was actually a difficult decision at the time because there were these like scrappy startup guys in SF, right? I think like they went through IC. Then Mt. Gox is very much like the established player that had the track record. I think that decision definitely worked out in the end. And then kind of fast forward to like 2016, 2017. So throughout that time, I worked at a bunch of like traditional startups, like Airbnb was probably the largest, and then was the first employee at a Kickstarter startup, which in many ways was like a dry run for crypto. And then with the rise of like ETH and then ICOs in 2016, 2017, that's what really drew me into the space because I loved how ICOs democratized access to early stage investing, right? That especially back then, was previously really reserved for like the Silicon Valley circles. And kind of went full time in the space at that point. And then from then till now, co-founded 2 crypto venture funds, co-founded the MIT Crypto Alumni Group Beaverblock, and then the MIT Harvard Blockchain Accelerator, and then most recently co-founded SatLayer. And so with SatLayer, we are the economic layer for Bitcoin. It's kind of like how we think about it. By really, I think, transforming Bitcoin into something that is fully programmable and the best collateral of our generation. And we do that by leveraging kind of restaking as the infrastructure. In many ways, I think we kind of see ourselves as the connective tissue between Bitcoin and kind of like the existing DeFi infrastructure, right, within crypto, as well as between Bitcoin RWAs, Bitcoin stablecoins, and even Bitcoin AI infrastructure. So yeah, I'll kind of leave it at that, and then toss it over to Leo.
Hello, hi. Thanks for inviting me. So my background, I started I did my bachelor degree in math. And after that, I started as a graduate student at Chinese Academy of Science, doing some research related to cryptography. It was back in the 2011. Then found the Bitcoin white paper. I thought it was written by my friend whose name is Okamoto, but it's actually coming from Nakamoto. So it's a pseudonym, but I don't know that. I didn't know that at that time. So I started doing some Bitcoin mining back in the 2011. Mine Bitcoin for about 4 to 5 years. Then I think it's a little bit boring just for doing some Bitcoin mining. So I went to the US to pursue my PhD at Cornell. finished my PhD degree from Cornell. Then like I started doing some like research and also like development like at National Institute of Standardization and Technology and also Archivant. Yeah, like I participated in the ICO summer like more from like a VC perspective. And then I still like keep mining Bitcoin like all the way like back in the 2011. And then when I was at Archivant, we finished the bridge, which is essentially a ZK bridge like between Archivant Ethereum and Archivant Solana. So like I when like finished the development of the bridge at that time, it was like early 2022. Like I found it took so much time to generate a ZK proof at that time. So I think maybe we can borrow some idea like from the Bitcoin, like we can develop some like more advanced technology, more advanced hardware technology to accelerate the proof generation for ZKPs. Yeah, so like we started like Cysic. So Cysic is a combination of two words. The first is like cipher, which stands for like this like ciphertext. The second word is like ASIC, which is a specialized hardware like for this trick. So it's a combination of two words. So like when we started Cysic, our goal is to develop some like hardware to accelerate the proof generation for the KP. But then like we found like yeah, it might be like more convenient to develop a proof network or maybe like a compute network for the ZK technology or for the AI technology. Yeah, since like I'm well connected with like miner community around the world, so like we started developing on like a concept called ComputeFi, which like converts all these computing resources into like on-chain like assets, and everyone can participate, and everyone can have a profit in it if you participate in the ComputeFi. Yeah, so I'll pause here. Yeah.
Super interesting. Impressed with both of you, by the way. You have both have like such amazing backgrounds, also outside of crypto. Very cool to be doing a cast with two titans. So my head immediately goes into like since we of course have like basically a ZK company here and a Bitcoin company. I'm thinking the real overlap is around like Bitcoin mining, right? I haven't tracked too much how that space has evolved over the last couple of years. I've definitely seen like some miners potentially start providing like GPU services for AI as well. I'm not sure like how do you guys see that space like evolve now that there's also like basically ZK mining or like proof generation coming as another vertical. It is basically like miner heaven at the moment where they are just like making money and just switching gears whenever they want, or do we see maybe like specialized miners come along where some are like focused purely on Bitcoin and some are focused purely on ZK? What have you guys observed in the space, Leo?
Sure, yeah. So I guess so there is like a layer two like trends happening like last year, like all since last year. So like all this like layer twos like I mean like the ZK layer twos like we help them like do the proof generation for them. Like I guess for Score like we account for probably like 60% of the computing power for Score. And then there seems to be like a decline in the computing requirement in the like layer twos. But then like there is like a rising of a demand in the real-time proving from Ethereum itself. So Ethereum is actually like we are like doing this like real-time proving, which means that you need to generate a proof like within the block time, which is like 12 seconds for Ethereum. So in that sense, like you just need to verify the proof for each block, and it will like hugely like scale up the gas limit for each block time, like for each block in Ethereum. Because probably like Ethereum right now should like spearhead I mean like the ZK development like in the community. And then after that, like, we should like follow the like lead of Ethereum to do the proof generation. We want to like do it like in real time and using like very limited resources in like under 10 kilowatts of like GPU servers. So in that sense, like we can basically like you can basically run the GPU servers in your garage to generate the proof for Ethereum like for each block. And it will like be very helpful to like both like decentralizing and also like scaling the gas limit for Ethereum. And like through that, we can also like expand to support some like GPU like requirement like for the AI crypto area. Yeah.
Yeah, so I understand like the at least in crypto, like the use case for CK is very broad. I'm just wondering, like now that miners have other avenues to make money with their mining equipment, what will we see happen? Are we going to see that maybe like the hash rate's going to go down? Will we see them place way more mining equipment to basically solve both? I'm wondering how does this play into with the halvening as well? Are we going to see something happening here, or maybe? So I remember a lot of people were really afraid that post halvening, like always, mining would become unprofitable, and that Bitcoin fees themselves aren't enough to pay for the mining equipment. Now there's basically two additional use cases for your mining gear. Maybe the economies are different. How do you see that, Luke? Like, do you guys have like relationships with miners, or are you a bit like, tied into that ecosystem?
Yeah, absolutely. I mean, we work with some of the biggest miners in the world, and then certainly I think they're moving adjacent into AI infrastructure, right? I think you kind of see this in the U.S. maybe more clearly just from CoreWeave, right, being publicly listed. Because I think at the end of the day, right, mining is very much a hardware business, and then I want to say like almost like a capital management business, right? Because you kind of have your working capital that oftentimes is in Bitcoin, and then you have your fixed costs, your ongoing costs of like electricity, right? Like a little bit of labor, right? And then the land lease costs as well. But bulk of it is frankly electricity, right? And I think in that way, it's not much different than AI data centers, right? And so so that's where I think some of the biggest miners in the world are actually working with one of our partners, Aether, right? In kind of deploying AI infrastructure and then renting out that AI infrastructure to right like the the AGI companies that are just demanding like infinite amounts of compute. And I think at the same time, though, right, I think Bitcoin mining in and of itself, right, I think has seen kind of like decreasing profitability due to halvenings. And then I think with some of the Bitcoin layer twos and side chains like Fractal, at least for a time, right, kind of allowed them to kind of increase profitability a little bit. But I think in general, right, like the general trend is kind of like profitability will continue to go down for Bitcoin miners.
Yeah, makes sense. Are you guys with SatLayer worried about like the decreased profitability of mining? I guess like it doesn't necessarily affect profitability in DeFi, but I imagine it's somehow still tied into it.
Yeah, I mean, honestly, I think we're not very worried because I think in many ways it's a plus for us, right? Because the decrease in profitability in the mining side means that a lot of these Bitcoin miners that do hold significant amounts of Bitcoin are then needing to look elsewhere to generate profit/yield on their Bitcoin, right? And one way is through staking and restaking with us. And then it's also, kind of on our side, I think we've taken a very different approach from, our peers like Eigenlayer and Symbiotic in terms of the actual use cases that we're devoting a lot of internal resources towards. And for kind of many reasons, one of which is I think we can all agree here that like Bitcoiners are a bit different than like ETH holders and like Solana holders, where Bitcoiners generally are much more risk adverse, right? And generally are okay with just like much less yield as long as there's a lot less risk. And so that's where we've been developing these insurance products backed by Bitcoin for Bitcoiners. So that you essentially get kind of principal protection, right, in exchange for lower yield. And especially if you talk to like the biggest miners, right, or like exchange staking arms, ETP, ETF issuers, and like Bitcoin treasury companies, like that's all very appealing to them because they're not looking for like 10-20% yield, right? And then getting kind of getting blown up or losing principal. They'd much rather get like almost like single digit yield. That's low risk.
Yeah, makes sense. Oh,
Yeah,
sorry,
so
go ahead.
maybe I found something to what Luke has said. Like I totally agree with what Luke has said. Like I'm running some like big mining farms like in the United States. And I guess like right now the profit from the Bitcoin miners, they are like actually like increasing. So like things like with the increase of the token price for BTC, So their profits like starting from just 15% to right now 60 to 70% of that. So I guess like, but the miners, they're still like worry about the things. Yeah, since like miners, they are all like their pattern is like to mine then like to sell the coin. And I guess there is something like the BTC5 which can help them to reduce the risk there. Yeah, so that's like something like I just want to add to that.
Yeah, we had Smokey on a while ago, and he made this really good statement that actually you want like the safe staking yields to be relatively low. And I guess in the case for Bitcoin, you actually want like the mining yield to be relatively low because it forces miners to go out and get additional yield on their Bitcoin. Sure, you have to risk it a little bit, but it makes them active market participants, right? And if technically a miner could just make a bunch of money by sitting on their Bitcoin, keep mining it, and if that purely on itself is too profitable, then I guess you get that way too many Bitcoins are taken out of circulation, they're not being used profitably. And I guess indeed, like for businesses like SatLayer, that'd be kind of detrimental if no one would be willing to stake their Bitcoin, right? Instead, they would all be sitting on it all the time. Switching gears a little bit, I'm wondering, like, so we know Babylon, SatLayer, you mentioned Symbiotic, Eigenlayer. So for our listeners here, these are all protocols that basically provide infrastructure/security services to protocols and chains. They make revenue on that and they distribute that back to their stakers. In the case of Eigenlayer, to Ethereum stakers. In the case of Babylon, to Bitcoin stakers. How do you see that space now that it's matured a lot? To be honest, I think in the last 2 years it's really developing more. How do you see that space at the moment, Luke? Has like revenue materialized significantly? Have you had to maybe pivot a bit and do deeper integrations in DeFi? I remember the early like Eigenlayer was very pure, like you just stake, get security, that's it, and they've had to like broaden out their product suites. Did SatLayer have to do the same?
Yeah, I mean, I think, I think as is the case often with building new projects and new startups, right? You never end up exactly where you intended to be from the beginning. And so, yeah, I think for us, we've certainly had our share of learning and I would say like almost like more course adjustments. And frankly, I think, we've certainly been fortunate being in kind of the BTC ecosystem that, we haven't had to make full pivots, right? Like some of the other, I think, sectors in crypto over this cycle. But yeah, I mean, for us, I think it was the realization that, I think on the Bitcoin side, one, I think users generally care about getting yield and getting more Bitcoin, right? And so for a lot of our use cases, it's almost focused a bit more on like the economic end of economic security and almost like financial products. And then I think the other big realization is like, I think candidly, no one cares that much about security, with the exception of maybe like, the 2 weeks after a major hack, right? But everyone all the time cares a ton about liquidity, and there's no better liquidity than Bitcoin liquidity. So that was I think another big learning for us, is to really lead with that first, right? Because that is a conversation that everyone is happy to have, or maybe even trying to directly like proactively have, and then kind of like almost bring in security as like kind of like a 1-2 punch. And you see that with some of our use cases, right? Where kind of the insurance ones is very much about I think kind of a slightly different take on security, right? Of like more, I think, in terms of like protecting principal, right? But it's still allowing users kind of generate safe restaking yield. And then, kind of in our work with Plume, that one is actually much more about kind of shared security of actually for their layer 0 DVN, that's very much focused on kind of being effectively a bridge for RWA assets, right? Bringing the Bitcoin that we have on tap to provide Bitcoin-based security for that bridge. And then also at the same time working with them on the Bitcoin liquidity side of kind of having Bitcoin representation on Plume itself, and also working with them on the stablecoin side of things. Because generally, we've taken a strategy, I think, that is kind of markedly different from Eigen, where instead of focusing on kind of net new teams, we pretty early on, so as of like Q3 of last year, decided that we would rather work with the biggest and strongest players in their respective ecosystems. So that's where you see the likes of Plume, of Aether, of Layer Zero, of Cap, and on the stablecoin side as some of our closest partners.
Yeah, it makes sense. How do you guys balance like staking, which should provide security and thus can get slashed if something goes wrong, with the fact that people who provide Bitcoin to you guys don't want to lose their Bitcoin? Is that this like insurance layer that you've added on top, and like how much is that costing actually, like on the yield itself?
Yeah, so the insurance definitely a big part of it. Where with our architecture, where we currently have our core restaking contracts on Babylon on the Cosm Wasm instance, but we are actually going through audit right now on the EVM version of our restaking contracts, and then we'll be deploying those on Babylon's EVM instance, but also on other EVM chains, because for the way the insurance works, right, where it's basically the restaked Bitcoin acts as insurance collateral, and then because we kind of develop fully programmable slashing, that is how the insurance payouts are handled and like the insurance logic sits. So because of that, right, because there essentially are different paths you can route this whole insurance kind of infrastructure through. That's how we're able to even potentially provide insurance against like Babylon slashing, right? Where it's like you run the logic through an EVM chain that's not Babylon, not Babylon's EVM instance, right? And then we're also able to not just only take Bitcoin liquid stake tokens like Lombard or Solve, but also take wrap Bitcoin assets. So then again, the underlying collateral has nothing to do with Babylon. The logic is not connected to Babylon. So then we're able to insure against, slashing or some of the event happening on Babylon.
Okay. Yes. Yeah. So for here, I just want to add something to the question. So as a like a PhD like in security, or as an assistant professor like in the security, I totally have a deep feeling of like people like they don't care too much about the security. They only care about the profit, like in staking the things. But there's something like we can have both. We can have the profit. We can have the staking yield. Will have the security at the same time. So like through the zero knowledge proofs, like record probably from also from Justin Drake of Ethereum Foundation, like Ethereum right now has the largest amount of like token staked. Like for Bitcoin, it's like the security is like secured by the like BTC, like the mining power like of BTC. But for Ethereum, it's actually like insured by the like stake ETH there. But it's like the ETH they have this like I guess like lack of security. It's like you need to like wait for some time for it to like to be like finalized. But with ZK, with like real time proving, like you can like have the security and you can have the like profit and have the security instantly with some like specialized hardware like for the TP, and then like you don't need to like compromise for that. Yeah, so that's like something that I want to add to the question.
Yeah, I don't want to say I'm not a fan of SatLayer and restaking, because I am, but I am a ZK maxi, and sometimes I do think that with shared security, you get these like really complex systems where there's like insurance layers on top. You need to have like fraud proof, slashing. You in the end get a kind of like economic security number, so you're kind of sure like a bridge is secure up to a certain amount. But with ZK, like if you implement it well, there's kind of like no way to commit fraud, and that's kind of like the systems that I like the most. I find them should like to be honest, like take much longer to build and go to market with them. 100%. So there's an advantage to building these ZK systems, but once you have them, they're kind of like simple to reason about. And instead of having like a number where all this bridge is like secure up to 500 million being transferred over it, and after that we need to get like additional stake, you kind of know it'll always work quite well. So I'm wondering if we're going to see ZK take over maybe a bunch of the services that like restaking providers give right now. In that case, Luke, I think you guys have done like the smart approach, like realize indeed like selling security is actually like not the USP, right? It's more the liquidity, the DeFi portion where the value add is. Have we seen that already? Like potentially projects moving away from like leveraging restaking and instead using ZK to secure themselves, and that way save money, We originally chose not to leverage EigenLayer, for example, with Union, specifically because we thought the pricing was too much in effect for a project for what we're getting back from it. I wonder if current projects have made that leap. I'm not sure if you're familiar, Leo, with projects swapping away from staking to full ZK.
Yeah, sure. I can provide some pointer to that question. Yeah, since if you rely on this crypto economic security, then as you just mentioned, the security also depends on the value of the coin. If the value of the coin decrease a lot, then of course the level of security also decrease a lot. But for ZK part, we don't need to worry about that thing. So there's an old saying in ZK, in mass we trust. So if something is proven via ZK, then we don't need to worry about the security. And the only issue right now here is the efficiency or the proof generation speed for the ZK. And also the decentralization. Of course, you can achieve the speed via a very large cluster of GPU servers, but then it's not centralized. It's not decentralized. We want to achieve the decentralization and the efficiency of generating ZKP at the same time. So that's something what Cysic or the ZK community such as Succinct and also with Zero and Nexus, we are all pushing forward. We want to achieve the decentralization and also the efficiency of the ZK proof generation at the same time. And it will be benefits to not only the ZK community, but more broadly to the blockchain community, in general.
Absolutely. I mean, yeah, Leo and Kara, I'm actually curious in terms of the efficiency and speed of proving these days.
Yeah, so I guess right now the public verifiable public verification is coming from Succinct. You can achieve real-time proving for 98% of the blocks of Ethereum using a 160 Fortinet GPU cards. So that's the current state of the art. And by real-time proving, which means you generate the proof in less than 12 seconds. And I guess there are some other improvement from Brevis or from Polygon, which plan to achieve it using a small cluster, say 32 or 64 GPU cards there. But right now, I guess the short-term goal is we can achieve the real-time proving using a cluster of just less than 10 kilowatts, which means you can run this a cluster in your garage, and then probably within some specialized power from from us, you can just be using a kind of small machine to achieve a real-time proving, which means it's basically achieve the decentralization and the efficiency at the same time. So yeah, so that's something seems we aim to achieve sometime next year.
Yeah, this is still so mind-blowing to me. I remember early days for ZK, still very theoretical. We were all saying basically any application is infeasible. Proving an entire chain will cost us many data centers. This is 50 years away. And it feels that, to be honest, in 2 to 3 years, all of a sudden it went to, well, to be honest, if you had a big garage, you could not just prove Ethereum, you could prove potentially multiple chains with that. Potentially almost all blockchains if you have a big data center, right? So for only a fraction of what AI is using, you could basically secure and verify all crypto activity out there. Not sure what the exact number would be, but it means such a massive leap. What you mentioned specialized hardware, Leo, does that mean that soon I can basically have a Cysic Mac Mini with a specific chip inside that will match a GPU cluster?
Yeah, so that's something we aim to achieve next year. And probably with some big support from Ethereum Foundation or big support from the miner community, then we can achieve sooner. So right now, since I talked to the Ethereum Foundation, they said the things we are generating for the ZKP, we are not bringing this POW back to Ethereum. And the thing like the miners, they can get profit from doing the ZK proof generations, like from the say like from MEV or like from the slash things like of like the block builder. And I guess like that's enough like for the miner community, since like with the increasing value of the Ethereum, the ETH token. So that's something like so like Cysic right now is talking to the miner community to get their like more interested in like put like more assets in doing the proof generation like for Ethereum.
Makes sense. So one thing I wonder is, I get like if you have GPUs, you can generate proofs and you can switch also what you're proving. But I'm guessing if you develop specific CPUs to do the proving or specific chips, can you still switch like proving systems or circuits, or are you locked into like proving SP1 or RISC-0 or specific circuits? How flexible is it for ZK miners to do this?
So that's another like challenge like we're right now facing. So it's not like the Bitcoin or the Dogecoin, which the mining algorithm they are like fixed there. So right now we are like in the process of like converging the algorithm, the algorithm of doing the ZK proof generation. But if you like dive like deeper into the algorithm, then you can see like the algorithms can be break down into some like more fundamental elements, such as like number theoretic transfer, or like doing like the hash function for the Merkle trees. So like the Cysic chip, they are like supporting this like most fundamental modules. And you can do this like a legal style, or like legal style of like combining this like most fundamental module to get the proof generation algorithm for SP1, for RISC-0, for Nexus, and the pop like also for pop for this, which is like coming from like Polygon. Yeah, so that's something like so that's like one of the principles we are having for the designing of the our like specialized ZK chips.
Makes sense. So in the end, like ZK chips, if I understood correctly, still a bit like inflexible in a sense, like you're tying into it. So do you think like we're going to see GPUs still dominate proving markets for the next couple of years while like everyone settles on what type of ZK VM, or do you think we're going to see them like way earlier dominate?
Yeah, so I guess that's also I would say it's not very related to the technology. So if like Cysic would develop some like the ZK chips, which hugely or significantly like scale up like one type of like ZK generation, then like I guess the community will converge to this like special direction. If there's like no security flaw you can find for this direction. So like, there's like some way like we can push for say like one particular direction for the ZK proof generation. And we just need to be like very careful and very cautious about the security flaws in there. So like it's like saying like you can use a tiny machine like which like I guess the price, like there are like two metrics here. The first is like performance per dollar, which means like how much you pay for the hardware. The second is like performance per watt, which means like how much you pay to maintain this like hardware. If we like outperform the like GPU by I guess like at least one order of magnitudes in this sense, then people they'll just choose our hardware over the GPU server. So I don't think that GPU server will still like dominate the area for the upcoming years, but certainly it still will dominate the area for the upcoming months, from like 6 to 8 months.
Makes sense. Okay, so I've learned quite a lot here on the mining scene. But besides that, what are you guys like most excited about on chain? Because I guess Luke, technically, like you guys haven't spent that much on like the shared security mining side of things, and more on finding like use cases for Bitcoin on chain. You mentioned like Bitcoin-backed stables and stuff. But what do you think is going to be the big unlock for BTC-Fi? Because I've seen it myself, like get started, like it's starting to do well. We've got some TVL here and there, but it doesn't yet like dominate DeFi the way I would actually like to see it. And sometimes I feel the Bitcoin actually is being used more in like centralized finance, and that there's like more treasury companies, more like people doing a type of lending look completely off chain. And I hate to see that. The idea that Bitcoin has more utility in the TradFi world than in the DeFi world, I feel like is a failure on our end and something we have to like remediate ASAP. How do you see it develop so far?
Yeah, 100%. I mean, I think kind of the way I see things going from here is almost like slowly at first and then all at once, right? Because I think in many ways, like, Bitcoin DeFi is still in the early innings. And especially, I think very simply, if you just look at like DeFi summer, right? DeFi summer, if you zoom out, the chart looks like, pretty smooth up. But, for people that lived through at the time, it was like up and down and up and down, right? A lot of and I mean, I think in many ways, just like Bitcoin, like all of crypto, right? It's never super smooth, and there's always like valleys and troughs, and or peaks and troughs. Sorry. But yeah, I think right now there's definitely been a shift in kind of attention to all these, certainly Bitcoin treasury companies, right? But now you're seeing all these like just altcoin treasury companies slash like DATs, right? Digital asset treasury companies. But I think especially for the Bitcoin ones, I think very quickly many of those at least, if not all, will be seeking yield on chain via DeFi, right? Because I think in many ways, Bitcoin treasury companies are getting relatively commoditized. The real differentiator at this point is like specific geographic markets, but you're really running into the long tail of those now as well. And then I think and then it comes down to, okay, how good are you at timing buys of Bitcoin? And if you just look at, I think like aggregate liquid fund performance in crypto, where like many liquid funds certainly underperform Bitcoin, right? I think you're going to see the same thing play out with digital treasury, like the Bitcoin treasury companies, in which kind of drive them to actually generate yield different ways. And that's where I think you'll see an explosion of kind of Bitcoin deployed in DeFi and then Bitcoin DeFi itself. And that's very much the future that we're driving towards, right? As I mentioned earlier, with kind of our kind of Bitcoin-backed insurance product. And then I do think, and this is maybe a slightly controversial take. I think Bitcoin is very much on its path to becoming a global reserve asset. Not the global reserve asset, but certainly one of them, right? Just given, I think, the macro backdrop and like, kind of the whimsical tariff attitude of Trump of, which country is going to try to raise tariffs today, right? And I think that's kind of shifted to, I think, many countries, right? Reducing the reliance on the dollar. And then I think what's really interesting with the recent push on stable coins is I'm very much curious on how the other global currencies respond, right? Japanese yen, Korean won, RMB, right? Because if they do nothing, then their lunch is going to be eaten as a currency, right? And like China's been working on its own, RMB based stable coins, but also USD based stable coins, which I think is quite interesting. And I kind of view it as like a vampire attack on like US dollar, where it's like now there's going to be US dollar running on Chinese rails, effectively.
Yeah, I usually speak with the Dutch National Bank as an advisor about once every 3 to 6 months. There's a big fear in the Netherlands, but in Europe overall, because we see, of course, US dollar stablecoin dominance be extremely strong and Euro stablecoin dominance being very weak overall, even within European companies. I mean, I live in Europe. My co-founder is Dutch as well, and Union holds its like treasury and stables, but USD stables, right? It's not Euro. I think there's actually really like good opportunity for Bitcoin to become the like global reserve asset if we can get the yields to be good, because the detriment right now for the Euro stable is the yield just isn't as good. Now, funny enough, had I like moved to Euro stables at the start of this year when Trump became president, I would have technically made 15% already, I guess, on it by just not holding US dollars. But I think actually that if we get like the reliable yields on Bitcoin, then that forms like the alternative for most European countries to not have this like strategic reliance on the US. And what I think, especially in DeFi as well, like the best base asset to have to use as collateral. We kind of look at recent bear markets. You both have been in crypto for a long time as well. The last bear market to me didn't feel that much like a bear market, right? My first one was when Bitcoin went from what was like 14K back to 3K, and ETH nuked back to $90. That I was scared at the time.
That was a real bear market.
Yeah, I thought crypto might be dead then. But then the one after that was like, oh, it still feels kind of okay, sure, it nuked. And this one, I don't know what it went back to, but I was still amazed that Bitcoin was, right, like above 30K or 40K or something. To me, that felt like pretty decent. So I'm wondering if indeed we've almost like transitioned out of Bitcoin's early days where bear markets are going to be bad. And we now actually have like a currency that we can use as safe collateral that we know will not fluctuate in value. And then we have like the base for good yields, right? Then that can be basically what's going to back perps, for example. If you can get rid of US dollars backing perps and instead just have Bitcoin do that on all these new dexes, potentially even for IPOs and stuff, that to me seems to be potentially like from a global security perspective, the best solution for finance across the world.
Yeah, absolutely. I mean, I think very much on the same page where, I think it's really part of like our vision and mission is to make Bitcoin into the ultimate collateral asset, right? It's already, it's very much already a store of value, right? It's on its way to becoming a global reserve asset, but to truly be a global reserve asset, you need to be able to use it as collateral, right? And make it productive. It can't just sit there as digital gold. I think we are just way past that as how economies function. And it's kind of, and that's very much goes back to like, what we want to help enable for Bitcoin. And then I think, to your other point, I think, certainly this most recent bear market, I think like to kind of what you mentioned, right? Like the previous bear markets, there was still question like, oh man, is crypto going to survive this? But the most recent bear market, it was more like, hey, let's make sure your team can weather this. But there was like really no conversation or question around is crypto and is Bitcoin going to survive, right? Because that's already become abundantly clear. None of it's going away.
Yeah. So I guess like with an institution like this, I guess like probably like taking part of the stage, like we're not like worry about the survival of like Bitcoin or Ethereum. Like we're just probably like there could be like some fluctuation like in the short term, but in the long term, like we are not worried about that. There couldn't be this like sudden crash, like probably like 80% of the crash of the value of these tokens. Like I mean like for Ethereum, for Bitcoin, for Solana, it's like mainstream like tokens. And there's like one thing like we are like pushing like Cysic is to have this like small portable miners like for each one to have. So like you want like we like for the centralized miners, like it's hard for normal people to maintain and it's also very, very expensive. But for this like small portable miner, you can just put it in your home to mine this like mainstream coins. It will be like more decentralized and more like convenient for ordinary people to participate like in the like in crypto instead of in addition to just buying the coin from the exchange. Yeah.
Yeah, it makes sense. We're nearing the end of the cast, guys, but I think we touched on some extremely interesting points here. I'm exceedingly bullish for ZK as a sector, for the utilization of like all the hardware people bought. Initially, I was really worried with miners, but I was thinking at some point, are they going to sit on a bunch of useless hardware? Like Bitcoin almost has to stay number one for them not to become irrelevant. But we now see new use cases as well. I'm extremely bullish on Bitcoin and fully crypto native assets. Bullish on SatLayer, bullish on Cysic. Do you guys have some closing words for our listeners? Where can they find you? Where can they learn more about your projects? And what should they be doing next to educate themselves?
Yeah, I think you can always find me on Twitter at LukeX, and then our for SatLayer as well, just at SatLayer. I mean, I think I think advice for listeners is just to you can just try things, right? Try things out. Try out, obviously try out SatLayer. Of course, if you haven't already, you may get a surprise in the near future if you do. And certainly try out Union and try out Cysic and just play around with things on chain, right? I think that's the best way to learn. And you may be surprised what else, what other, I guess, benefits or gifts you unlock.
Yeah, so like you can find my Twitter as like Leo Fan, then my like Chinese first name Xiong Xiong, and then you can search like for the Twitter for Cysic CYSIC dash XYZ. So that's like our Twitter. You can get all the updates like from Cysic on that. I guess the public, the online tips like for listeners is like believe in math, believe in Bitcoin, believe in like Ethereum, believe in like the ZK community, and also SatLayer. Yeah, so that's something that you can always get some profits. You want to use the profits to defend against the inflation in the coming years.
Perfect. I thank you guys so much. Thank you so much for educating me. I hope to have you two back in the future sometime. And for our listeners, everyone, thanks for checking in again. We'll probably see you all back again next week. And have a good one, everyone.
Thanks for having us.
Have a good one. Yeah.
Cheers.
Thank you. Yeah. Cheers. Bye.